Bitcoin's price is dropping, and you can almost feel the gloom in the air. But what if that price is only telling you, half the story? In this explainer, we are diving headfirst into a really fascinating paradox. The fear you can see everywhere versus the quiet, almost invisible buying that's happening right under the surface.
So this is the big question, right? It's on everyone's mind. Your gut reaction when you see prices tanking is to worry. But is this a moment of real danger, or is it actually a moment of opportunity? Let's break down the two powerful and totally conflicting arguments that are shaping the market as we speak.
Okay, let's just set the scene here. And there's no way to sugarcoat this. The mood out there is tense. We're seeing some serious selling pressure, liquidity is drawing up, and that creates this super volatile environment where fear just takes over. All that optimism we saw just a few months back, it feels like it's been completely replaced by this wave of pessimism.
First, let's tackle the argument for even lower prices. This perspective is coming from a seasoned pro, a veteran investor, specifically venture capitalist Chris Burniske, who's been watching these market cycles for a long, long time.
Now, what Burniske is saying here is actually pretty nuanced. He's not just a straight-up bear. He's saying that all this negativity is actually creating a fantastic long-term setup. The risk-to-reward is looking better and better. But, and this is the absolute key, he follows that up with a very clear warning. In his opinion, the time to buy isn't now, not yet. Patience is the name of the game.
So if not now, then when? And more importantly, where? Well, Burniske points to a specific target that's got a lot of people talking, the $56,000 level. He thinks a trip back down to that zone is a very real possibility for where Bitcoin could finally find its footing.
And listen, that $56,000 figure isn't just some random number he pulled out of thin air. It's directly tied to a massive technical indicator, the 200-week simple moving average. You can think of this line as the market's long-term heartbeat. In past bear markets, whenever the price touches this line, it's often a signal of a major reset, the point of maximum pain, right before a new cycle can really begin. Burniske uses this classic investment saying to describe what happens during these big resets. Babies are thrown out with the bathwater. It's perfect. When fear gets this high, people just sell. They don't think, they just sell everything. The bad projects, the okay projects, and even the best, highest quality assets. Everything gets slammed. So, let's just quickly sum up this bearish view. The market needs a painful, cathartic cleansing. Burniske calls most crypto liquid venture, basically super high-risk bets that you can trade 24/7, and yeah, a lot of them are probably going to zero. But this chaos is what creates the opportunity for a patient investor to swoop in and grab the few gems that get sold off way too hard. The bottom line, don't rush in.
But that is only one side of the story. Let's completely shift gears now and look at the counter-argument. Because while the price charts are painting this really grim picture, the underlying blockchain data is telling a totally different, almost secret story, one of massive accumulation. And this is where it gets really, really interesting. If you only look at price, if you only look at sentiment, all you see is fear. But if you dig deeper, if you look into the on-chain data that tracks what's actually happening on the network, a whole new story starts to emerge, and it's one of strength, not weakness.
And here it is. This is the bombshell counterargument. According to some deep analysis from On-Chain Mind, the market is currently seeing the single largest spike in hidden buying of this entire cycle. Just think about that for a second. While everyone is freaking out and selling, someone or something is buying and buying aggressively.
So what in the world is a hidden buying divergence? Well, it's pretty much what it sounds like, a huge disconnect. It's when the data shows massive buying pressure coming in, but the price is either going sideways or even down. This is a classic sign that suggests big, sophisticated players, the smart money, are quietly soaking up all the coins that panicked sellers are dumping on the market.
And this right here just lays out the paradox perfectly. The surface view, the one most people see and react to, is all red flags: falling prices, negative headlines, panic selling. But the hidden, on-chain view shows the exact opposite: aggressive buying, quiet accumulation, and what looks like smart money making its moves. It's like two different markets are happening at the exact same time. So why the disconnect? Why are people so scared? Well, it seems to be driven by some pretty familiar stories, right? We're seeing recycled headlines about a China ban, fresh waves of fear and uncertainty around Tether. These old narratives, whether they're true or not, are incredibly good at stoking fear and getting people to sell, which, you could argue, is exactly what these hidden buyers are counting on. Okay, So we have these two powerful and totally contradictory signals. On one hand, you have a veteran telling you to be patient. On the other, you have data showing historic accumulation happening right now. So how do we make sense of this? The truth is, it's not a clear-cut situation. It's a market that's caught in a massive tug of war.
Let's just put these two opposing forces side by side. The bearish view is all about the technicals, like that 200-week moving average, and it's bracing for a drop to around 56K. The bullish view is laser-focused on that on-chain data and sees the potential for a really powerful reversal. And you know what's interesting is both sides seem to agree on one thing. This whole situation is probably going to take weeks, maybe even months, to play out.
So, look, the most important takeaway here isn't trying to guess who's right and who's wrong. It's not about predicting the future. It's about understanding this deep conflict that's happening in the market right now. This incredible battle between the emotional, surface-level reaction and the cold, hard data coming straight from the blockchain itself.
And all of this leaves us with one final big question to think about. When a market is absolutely saturated with fear, where is the biggest risk? Is it in following the crowd and panic selling? Or is it in standing against that crowd, trusting the hidden data and taking the opposite view? That really is the billion-dollar question at the heart of this whole paradox. Thanks for tuning in.